Hello and welcome to Energy Insights, your go-to source for in-depth analysis of the global energy markets. Today we are taking a closer look at various developments shaping energy prices and market dynamics from Middle East to Australia, the US and beyond. If you are an investor, trader or energy professional, this update is a must watch. So let's begin. Our first segment focuses on the Middle East, where geopolitical tensions are putting energy markets on edge. Key hotspots, including Iran's Kharg Island oil export hub, remains under scrutiny due to military and political developments. Any disruption in the Persian Gulf supply routes can ripple across the global crude and LNG markets, driving prices higher and increasing shipping and insurance costs higher. The Middle East continues to be a critical supplier of the global energy, and any instability here can have immediate effects on the international markets. Trader and energy companies are closely watching supply routes, military movements, and policy developments to gauge potential disruptions. Uh, and similar is the case of the LNG also from the Qatar. The situation is still under the same scenario as we discussed in our last episode. Under the segment 2, we turn to Australia, where the Santos Limited Darwin LNG plant is temporarily offline for equipment commissioning at the Barossa offshore gas project. Although the shutdown is planned, it comes at a time when global LNG supply is already tight, largely due to the Middle East supply pressures we just discussed. Even short-term outages reduce the availability of spot LNG cargoes, intensify competition for supply, and can push prices higher across Asia and Europe. This highlights how sensitive the LNG market is to both the planned and unexpected disruptions. So under the segment 3, we are looking to the US crude export bottlenecks. Moving to the United States, we are seeing export infrastructure constraints along the Gulf Coast. Pipelines, terminals, and the shipping channels are reaching capacity as demand from the Asia, especially China and India, continues to surge. Interestingly, production itself is not the bottleneck. It is the logistics and infrastructure limitation data restricting crude exports. These bottlenecks can influence global crude pricing, shipping schedules, and trade strategies, underlining the importance of investment in energy transport infrastructure. Similarly, under the segment 4, we are looking to the market data and price volatilities. At the moment, segment 4 takes a closer look at current energy market data and price volatility across crude oil, natural gas, refined products, and the carbon markets. So under the crude oil, WTI is trading around $91 per barrel today, and the Brent is trading at $103 per barrel, up sharply due to supply disruption and export bottlenecks. Similarly, under the natural gas, the Henry Hub prices are around $2.93 per MMBTU, with spot LNG markets tied due to outages like Darwin shutdowns. Industrial demand, including the power generation and data center, is supporting higher prices. In case of refined products, gasoline has climbed to $3.10 per gallon, and heating oil to $4.29 per gallon, partly driven by the refinery outages in the US. Diesel and gasoline markets are experiencing a regional volatility. So in the case of carbon markets, the European Union ETS carbon prices up to 69 euro per metric ton, reflecting rising compliance costs as supply tightens and the industry emissions increase. In case of the infrastructure and logistics, export terminal congestions, pipeline limits, and the shipping disruptions are amplifying price swings. Even minor outages can ripple across the markets, affecting everything from the spot LNG to refined fuels. So overall market outlook is that in the short term, expect continued volatility driven by a mix of geopolitical tensions, infrastructure constraint, and supply side disruption. Trader and energy professionals are monitoring, particularly the LNG flows from the Australia and the Middle East, US crude export capacity, refinery maintenance, and unplanned outages, carbon markets, compliant costs. So this segment underscores that the market dynamics today are influenced as much by logistics and the geopolitics politics as by the production itself. Uh, in the next segment, before going to the last one, to wrap up, the global energy markets are navigating a complex mix of factors that the geopolitical risks in the Middle East, LNG supply disruption in Australia, US crude export bottlenecks, price volatility across crude gas, refined products, and the carbon markets. And our key takeaways for market participants are diversify energy supply sources to mitigate disruption risks, invest in storage and infrastructure resilience, monitor geopolitical and logistic developments closely. For investor, traders, and energy professionals, staying informed on these developments is critical to making strategic decisions in a rapidly evolving market. So thanks for watching Energy Insights. Don't forget to like, subscribe, and hit the bell icon for daily updates on the global energy markets. Thank you for watching Energy Insights.